The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 25, Nasdaq's up 5, S&P's are down 4.5. Gold contract up 770 at 13.19. You got silver up 21 cents, $16.39. Notes and bonds. Note market down 5 ticks. The 10-year note at 119.29. 30-year bond off 12, 143.15. And good old King Dollar. King Dollar right now trading down 253 ticks. Trading out at a price point. Where is she, my God?
Yeah, we have a different screen going on here.
This is 274 ticks at 89.680. King Dollar still having a tough time getting to higher price. And guess what? We got Powell 2 p.m. today.
It's not every day you have a new Fed chair raising rates for the first time, right?
Yeah, and putting a stamp on it.
That's it, yeah.
The stamp,
should be interesting.
The stamp's going to go on it.
That's right.
You got to love it.
Totally.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. And don't forget, folks, every trading day right here, if you want to understand options, futures, defined risk, strategies, upside down, 11 to 12 Eastern Standard Time, just go to TFNN, hit Target TV. You can go to YouTube, pull up TFNN. Subscribe to Target TV. It's free. Great show, great strategies, great education. Kevin Hinks, what's going on?
Good morning, O'Briens. And, oh, by the way, happy birthday, Tommy O'Brien.
Thank you, man. I appreciate it.
Didn't notice.
We had a good time last night, and we both showed up on time to work today. Even better. Gotta love it.
I'll tell you.
Important.
And I even made it to the gym.
You made it to the gym?
I
Blowing
did.
my mind. I did not make it to the gym this morning, and I proudly say so.
I was a little blasted at the gym, but I made it.
Good for you. Sweat it out, man. Sweat it out. Perfect.
The impatient part of my personality tells me, let's just get this number out and get back to work here. I don't like waiting till 1 o'clock, but that's what we're forced to do on a day like this. We sit and we wait for the announcement.
No, there's no doubt, man. And, you know, as Tommy just said, it's not every day that we get a new Fed chairman, and like it's going to be what's the state, what's the verbiage,
right?
Yeah.
It is. It's interesting to say the least. Yeah,
it really is.
Yeah.
And you know the way the market, you know, it's really my head, Kevin. Like I think there's some big divergence out here, and you know what it is. It's like it looks like the S&P wants to go lower. You know, gold wants to go higher, but guess what? If the S&P is going lower, man, I think everything's going to go lower. So it's like, oh man, you know, it's a toss-up here, you know. And
what I'm really looking at here is, this might be my gut, but I have this feeling that with his first comments that he did to Congress were considered hawkish, the fact that he's raising rates at his first meeting, it wouldn't shock me if he erred on the side of dovish when his comments came out at 1:30 Chicago time, 2:30 Eastern. Because remember, they don't like to shock these markets, and they don't like to be the ones that are driving these markets. So I think there's going to be, at worst, guys, I think there's going to be a very measured comment by Jerome Powell. I think he's going to just dip his toe in here. I don't think he's coming, full guns.
No, I agree. And I think that's what we're all.
And I think that's what the market kind of expects. Anything contrary would be a surprise, and they don't want a surprise, as you say, for sure.
Yeah. You know,
the market does not like uncertainty, so they're going to look for a nice, steady, calm tone for him. And is he going to talk about 3 versus 4 rate hikes? I think that's something. Is he going to talk about the dot plot, how quickly it moves up in 2018 versus 2019? You know, everyone's worried about the pace of rates going.
Yeah.
So I think that's a big thing coming forward. How quickly does 2018 look in terms of raising rates in 2019? So, you know, there's just a lot to go through. People are going to be dissecting this thing to death.
And you know what's so cool? Like, we were talking about this yesterday, is that all of us, is that it seems that everything is like really pretty cool right now. The economy's going forward. You know, there's plenty of jobs out here. It's like what I don't want to hear is that taking away the punch bowl, man. It's like, okay, hold it. You know, it's not the end of the world here. And so it's like, it seems that that is the only thing that, if they really want to do that, but that doesn't make any common sense. But we've seen it doing in the past. We haven't seen it in 20 years.
Yeah.
But that's what the Fed's job is too. Do you know what I mean? It's like,
right,
please don't take away the punch bowl right now. You know.
You could make a case that since that early February, jobs number and some of the inflation numbers that came out in early February, the numbers have been pretty muted going forward up till then.
Right.
So you can make a case for the economy is moving, but it's not overheating, right?
Yes.
He can make the case for that and have data to support him. So if he does that, I think the market will like that.
No, I agree. There's no doubt. There's no doubt. Yeah. Because these companies are making money, basically hand over fist. I mean, you know, now the FANGs are going to have a problem, right? I mean, that,
one of them's already having a big problem.
Yeah,
like we all talk
Facebook's
about,
down again this morning. I mean, they get some problems in paradise.
Every day there's a new story in terms of the scrutiny they're going to be facing. It seems like, but
But
it's not. You know what? The biggest threat to all these companies is the government.
Yeah, exactly.
And the government getting involved in their business, that is the last thing they want. So when this news broke about this, and really, it's news, but it's not old news.
No.
Right?
It's just kind of...
But the fact that it's coming to the forefront...
It's kind of like coming to fruition, right? It's happening.
You know what's so wild? There's no doubt that I think when you look at Facebook, right, it's a mind blower. You know, any type of power meeting, any type of government would always love to have all the information. And for some reason, Facebook, everyone just gave it to them anyway. It's like, oh my God, you know.
Right.
But now, guess what? The market's paying attention to it.
Sure.
And it's like the market didn't pay attention to it, now it's paying attention to it. So,
and it's going to happen quick when you talk about the political aspect, because there's already laws in place for political advertising. So it's like, you know, there's one thing in terms of private businesses, you know, it's like I have a Gmail account, okay, I'm using Gmail, I know that they can use my data, but I'm using a service, versus, you know, political advertising, where it's just going to be an easier avenue for them to clamp down, and we know how much money they make off that type of even advertising, and so it's just going to be an easy way for...
Kevin, do you see that thing with the EU, that they want to do 3% of revenue? They want to tax 3% of revenue. Now that's insane, but that's the EU for you. Do you know what I mean? It's like gross revenue. Are you kidding me?
Yeah.
That's pretty intense, man.
Is intense.
You know, but that's why the EU is the EU, and thank God we're not the EU.
Things out there to see what the response will be.
Oh, they're gonna have to fight that tooth and nail, because the bottom line is that, you know, it's not a number. 3% of revenue.
Yeah, I mean, you might not even be making a profit. How do you tax a company that's losing money or what it is? Right.
Totally. Yeah. Pretty amazing.
It's interesting. Facebook though is getting down to the middle of last summer prices.
Yeah,
it's been quite a pullback.
It's not even down 1% today. So even the Facebook sell-off here is starting to subside just a little bit.
Yeah,
it doesn't mean it won't move later in the day, but as of right now, it's only down 0.8%.
Yeah. No, I'm with you. There's no doubt. There's no doubt. Well, listen, 1 o'clock your time, 2 o'clock this time, volatility in the marketplace.
It's going to keep going, because you've got the conference 2:30, so they got the statement at 2. Yeah. It's not going to stop. That's right.
Folks, right here, 45 minutes. Kevin, we look forward to the show. Have a great one. Have a safe one, man.
Thanks for having me on, guys. Happy birthday, Tom.
I appreciate it, man. Have a good one, Kevin.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 19, Nasdaq's up 14, S&P's are down 2.5. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now down 23, Nasdaq up 12, S&P's down 2.5. We get the Fed, but guess what? We get oil. It's Wednesday. It's Thursday.
It's Wednesday.
It's Wednesday.
That's right.
It's Wednesday.
Not
Prince
quite Thursday.
Spaghetti Day.
Is it Friday? Not yet. That's right. It's Wednesday. Yes. So Wednesday, 10:30 a.m. Eastern Time. We get those crude oil EIA numbers. So here is the oil chart. Quite a run oil has had recently, right? I mean, we were flirting with 60, 61 not that long ago. We're up at 64.26 currently. We're looking at that May contract. And to zoom it in even a little bit, so quite a run even it's had this morning. So 64.23. And let's take a look at what kind of spreads we have in here as we wait for the EIA numbers coming out in 11 minutes. And I'm looking for the median analyst estimate somewhere around maybe a build of 3.25 million barrels on oil. We'll pull that up as well. So immediately I jumped in. The shortest time frames we have here are the spreads that maybe go until 11 a.m. So it's 9 till 11. They're expiring at 11. We have the news coming out at 10:30. Like we said, oil trading right now 64.25. So these would give us an option if we wanted to, and we like to set up the trades where they go both ways, right?
Yes.
We'd be buying a spread with bullish potential. We'll be selling a spread with bearish potential. And these line up with $64. So real quick, as we take a look at this, this would give us intrinsic value to the bullish side, right? Because we're 24 cents positive
into the money
in the spread.
Yeah.
And that's going to be about 25 cents of intrinsic value with 10 cents of premium on top. So the bullish spread is going to cost us about $34. And then we use the one going from 64 down to 62.50. Each of these being $1.50.
Yes.
We'll be selling this one. Now this one we're 25 cents out of the money, right? So no intrinsic value, just premium, similar amount of premium. So we're looking at about $43.
Yep.
Okay, so those are the 11 AMs with a little bit of a bullish bias there. Now again, if you just have a straight bullish bias, you don't need to purchase, you know, the bearish one if you're directionally biased, if that's your trade, or if you're just looking for a huge run down and you want to purchase an out of the money spread, putting up $9 on that side, just to, you know, put those options out there. So, but we took a peek at this during our break.
And this one's a beauty.
Yeah, so they're all kind of beauties as they line up. But what's nice is, and these get set as they open, as in every 2 hours, and oil was a little bit higher when the 10 a.m.s got set, which expire at 12, 64.25 is going to be our point here. Now, what's nice about that is that you have very little intrinsic value on either side that you have to pay for.
And because we're looking for volatility.
Right. So this, you know, you're going to have 2 pennies of intrinsic value to the bullish side here. This would be our bullish spread, 64.25 up to 65.75. Yep. That one's going to be costing us $24. Okay, and again, we have 64.25, $1.50 negative bearish spread would be selling this one. So we're looking at about $47, okay? Now, slightly different trades than the 11, right? Yeah. And that we barely have any intrinsic value. We're within 1 penny of 64.25 right now. Right. So each of them are just paying some premium on either side and would be putting up $47 total, and you would have until noon as opposed to the 11 a.m.s. Right. And then you would need that $47, or which would represent 47 cents away from 64.25 in either direction, becomes your break even, and you have profit potential for $1.50 from that level.
And what gets intriguing with that too is that we know many times you see it move both ways.
Oh, yes.
So you have a potential there to basically, once the news comes out, to trade both sides of it.
Definitely. You know, if it happens, let's say you are directionally bullish or bearish, maybe you get the move in your direction. Let's say we're bullish, right? Yeah. You get the huge move upwards. Okay, maybe you just let it run. But what if you're bearish and you get the pop upwards? That's where we've talked about it before. Maybe you take your money off, you break even, and then you look for the pullback in the next hour and a half. So we saw $47 on the noons. Now what's nice is the dailies also, the noons line up with 64.25.
Right at it, yeah.
All the other spreads are 64, which is not that bad, though, again, especially if you have a little bit of a bullish bias because you start with a head start. Yeah. So let's just take a look, because we looked at the 11 a.m.s, right? Yes. And those were $43. Right? So here, and those were for a $1.50 spread. Now, if you jump to the dailies, these are going to be $5 spreads, okay, versus $1.50. They're going to expire at $2.30, but they're going to have that same $64 price point. Yeah. You could be buying the bullish spread, okay, and that one. Now, this is moving around as we speak. This only has 18 pennies of intrinsic value now, as opposed to having about 25 cents of intrinsic value. And it's dropping dramatically, actually, 64.10. So the comparison's not going to be as ideal when it's just holding steady. But the bullish spread still has intrinsic value. Yeah. That one's going to be costing you, call it 37 cents. Bearish spread is no intrinsic value, all premium, and that's going to be costing you about 21. So you're looking at about $58. Right. And the difference there being, instead of having till 11 a.m., you have till 2:30, and instead of having $1.50, if you ever got just an insane move of $5, you do have profit potential on either side of $64. So there are all your trade setups. We got less than 6 minutes till those EIA numbers come out, and let's just pull this over real quick, because this is what we're looking at here. So the median analyst survey predicts the changes of crude 3.25 million barrels.
Look at that. That's interesting, because when the API came out last night, it was a drawdown of 2.7 million. Yeah. Yep. So that's, well, and Cushing went up 1.6, I guess. So that's going to be these numbers for what the Bloomberg survey is. It's totally off as what API come out with last night. And
sometimes they do differ. They do.
No doubt.
But, you know, it's all about expectation in terms of what the market's looking for. So that's what the market's looking for. We'll get those numbers in less than 6 minutes, and we'll see how the news reacts.
Totally.
Okay.
So let's just bring up, let me go back. I just want to bring this up for a second and take a look at the actual contract. So we're at 60. Now this is a delayed contract at 64.28, but that's pretty close. We were at 64.14 or something.
Yeah, and when we started the analysis, we were at about 64.25. Yeah.
And now what's intriguing is that even, oh, look at that yesterday though. Oh man,
it's had quite a run in the last few days.
And not only that, folks, this volume came in yesterday, so that's interesting, man. 64.07. Man, this is saying it can actually go to 65.
Well,
65.87.
That's what it's saying to you. We'll see where it goes. That's your bias. You know?
I know.
People could be looking for the same thing as to a pullback, as in quite a run. I mean, it's gone from 60 to 65. Maybe it has a little breathing room to the negative side after quite a run as well, with both of those volatilities.
That's intense, man.
Yes.
And you know, what's amazing is that if you still look at the XLE, you know, bottom line, that thing can't move. You know, it's up 90 cents today, but you can see it's laying down at this consolidation at the lower end. So Exxon Same setup, man. It's pretty amazing. Every time I look at Exxon, it's even hard to comprehend because Exxon is so big.
Oh.
You know, and it can't move.
Yeah.
Pretty amazing.
It is.
No doubt.
It is.
And, you know, one of the, I switch gears just for a second and go off oil for a second, but GE yesterday broke down again.
Yeah.
Look at that. $14.11 to
$13.62. Talking about a 50-cent movement on a $14 stock, right?
Totally, man. And, you know, I mean, I've been looking for this to go down into this level for a long time, but even I'm shocked that it's actually going to go there.
Yeah.
You know, it's
not that long ago that we're up above $30.
Oh, I know.
I mean, you're talking about June of last year. We're at $30, and we're now at under 14.
And it doesn't look to me like it's going to stop.
Yeah.
And, you know, pretty intense, man.
Definitely.
Stay right there, folks. Tommy and I are coming right back with these oil numbers. We have the Dow Industrials right now down 51. NASDAQ is up 3. S&Ps are down 5.5. Come right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. That's quite a... Crude inventories fell 2.62 million barrels.
Yes.
Gasoline fell 1.69.
And so before we jump to the chart, it's always interesting. Looks like the market was initially a little surprised by that 2.62 million barrel build. And to scroll this down, we'll keep the suspense of where the chart is. Bloomberg users are expecting, this was prior to the news, a 1.875 million build. So with that in mind, let's jump back to the Nadex platform. So we were trading at 64.25 just prior to the news, right?
Yeah.
We're up about 20 pennies from there. Here's the chart right here, currently trading 64.45. So I have the two spreads up here we were looking at for the noon.
Yep.
And those are the ones that lined up. Oil was right at 64.25. We were going to pay about $47 for both of them for a volatility trade, which would be 47 cents. Let's call it 50 for easy math. And that would be, so you're looking either 64.75 to the positive side or 63.75 to the negative side becomes your break even.
And we're at the positive right now.
We're
64.72.
Exactly. So here's your bullish spread. This is going to be the one that has most of the value in it.
Yeah.
And so yeah, you know, you're looking at right now, you'd be able to close out that trade. You know, you have value above 64.25. So again, you're looking at about $40 about a value currently, and this is where we talked about. Let's say you were bearish.
Right.
This is the exact example, or you know,
it would be. Yes.
You could close out that trade, recoup most of your money.
Then you only have 7 pennies at risk.
Exactly, and then let's say you're really bearish, you look for the pullback underneath, and this remains inactive.
And you have to noon.
That's
which is really cool.
An active position until noon. So we'll check back in on it right now. Oil trading 64.55 on those notes.
I love it.
Yes.
Let's go to our man Tom in Plymouth. Tom, what's going on, brother?
Hey, good morning, Tom and Tommy. Happy birthday, Tommy.
Thanks, man. We'll just keep it going. It was yesterday. It's going all weekend. That's what he said.
Hey, are you gonna get hammered again up there?
I think it's happening right now. Maybe we're coming today.
No, it's just it hasn't started yet. We're gonna have a little storm. I don't think it's gonna be that big a deal.
Yeah, New York's getting it then. Yeah, that's
Tom's an optimistic guy. I heard 8 to 12 inches in Boston, Tom. Maybe you're just getting used to it, man.
We have plows up here, though.
There you go. See? Exactly.
That's awesome.
That is.
So, TVIX, huh?
Yeah, I got landmines planted all over the place on this.
Let's take a look at it. So you get the TVIX. This is the velocity shares 2 times shot ETN. This is the
2 times VIX.
Yeah, 2 times VIX. So let's take a look at this baby. And you know, there's going to be volatility out here today. I mean, that's. So what are we doing? Did you already buy it?
Where are the landmines, Tom?
Did you buy it for the statement? What did you do here?
Well, I have it from 770 all the way down to 701.
Okay.
Got 'em
Nice.
in there. So it's picked up a few buys here.
Yeah, listen, you know.
Monday was a good day, right?
You got a good spike there, man. You know, those spikes, I suspect that's going to get tested, man. Let me just see something. So, you know, I've been talking about the FTSE. You know, this thing broke down, and it can't get up. And that says quite a bit about, you know, we broke down on Monday. And what I mean by breaking down, folks, this broke the February 6th and 9th low. The DAX in Germany, which is, you know, in trouble also, you know, bottom line, that's laying at it. Now that's, to me, that's setting up like, okay, man, our S&P can have a tough time. So I think that I like the trade, Tom, you know.
Yeah, well, usually, and I don't know if you agree with this, but usually you can't get in this like in the morning. Like if it you know.
That's correct. Right.
It takes off like overnight or in the early morning or whatever. I mean, so if you're not in it, it's hard to get that first.
It's
move.
You know, it is throwing the dice. I mean, we're all throwing the dice most of the time anyway. But you know, the TVIX is throwing the dice because you absolutely have to be in it before the move. You know, because
just so quick.
Because you know, once the market sells off, that thing goes to the moon.
Yes.
And once the market takes off topside, it goes to hell, like very quickly. You know, so
I think it was last week or the week before that was at like 670 or something, and it moved out of there real quick one day.
Yeah, and listen, what is cool, I think, trading this today is that you are going to have volatility. And really, this is an insurance product. So I can see, you know, bigger operators, even if they're long biased, well, they're going to probably buy some insurance.
Sure.
And that's what that is. You know what I mean? And, you know, so I think even, you know, basically going right up to the statement, you know, you'll probably get some action here, man.
And that's why I was just pulling this back. So, yeah, on Friday, that's where it was floating around, you know, 670, 660. And then Monday, of course, was a big day where it shoots right up to, you know, 870. Yeah.
Well, I'd like to get some in the sixes, but I don't think it's going back that far. But, hey, if it does, I will.
Not today, I would say, and not before 2 p.m. Eastern time.
Yeah. Yeah. Doesn't look it. Doesn't look it. The, where's that dollar right now? This whole, okay, we're down 269. Let me just pull it. ZX. So, ZX.
I do not trust that gold market one bit right now. I don't know.
Yeah,
I'm
listen.
usually on it, but
I'm with you. It's, you know, I like what it's doing out here today. Yeah, the dollar still wants lower price, man. So, hey, the way this looks to me, man, it looks like 2 o'clock. We're going to come into lower prices. The thing is so wild. This is what I'm trying to have a hard time comprehending fundamentally. That technically it looks like it's going to go lower. But I'm saying technically it goes lower, gold's going higher. It would seem that the statement is going to be like you, Kevin, and I were talking about, that he's not going to shock the market. But if he doesn't shock the market, I'm saying, well, why was the S&P going to go down then?
Sure.
You know, so
we'll find out.
Yeah, no, exactly, which is going to be kind of cool, you know.
Yeah.
So, bottom line, hold on for the ride, man.
Yeah, we'll see about that. I'm also looking at that SCO. You can look at that if you get a chance, and maybe.
And here, stay right there. So the SCO. This is the ProShares Ultra Short Crude Oil. Look at this. This is interesting, huh? So this is.
Yeah, the fund will seek daily investment results correspond 200% of the inverse of the daily performance.
Okay, oil's up, right?
Oil's up. So this is down. Yeah.
That's hard for me to comprehend in 1 second. Ultra short.
No, it's just like a double short.
It's a double short.
It's a double short.
Oh, and it's down. Of course it should be down. Okay, good. Yeah, right. Wow. Yeah.
No,
okay.
sometimes I know it's a little bit of a pretzel in the mind, but once you, it's double short.
So what are you doing with this, Tom?
Oh, I'd like to buy. I've been watching it for the past week or so, and I keep waiting to pull the trigger, and I don't. And it's like,
Yeah, don't pull it yet, because if you do go over to that oil market, you know, that was a decent pop. Yeah, look at this pop. This is a big pop.
We're up about 50 cents since that number came out, and before we let you go, Tom, I mean, these numbers, they were big. I mean, the median estimate was a build, whether it was 2 million to 3 million, depending on whether it's a Bloomberg survey or the analyst estimate. And so
you look at draw.
Yeah,
big draw.
You know, instead of a build of 3 million, there was about a draw of 3 million, to put it in, you know, a simple. So be careful.
Cooking, brother.
All right, my friend.
Thanks,
Thank you
Tom.
so much.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Right now, we have the Dow Industrials trading down 38. Nasdaq is up 2. S&Ps are down 4. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. You know, when we look at these numbers, there's a big differential in these numbers.
Yeah, so to check back in, it's 10:43 Eastern Time right now. It's been about 13 minutes since the crude oil EIA numbers came out. And, you know, this is the headline number, of course. What's the median estimate? Yeah. The median estimate was about a 3.2 million barrel build. And what happened? You had a draw of 2.6.
That's huge.
You know, you were looking for about 3 million extra barrels. We had 3 million fewer. And you have PADD 3 crude, a decline of 3.6 million barrels. Look at the gasoline, a little bit off of where they were thinking, at the, you know, versus expectation of about a decline of 2.4 million. There was only a decline of 1.6. Some interesting numbers, especially. We haven't seen a miss like that in the last few weeks at least.
We haven't.
And to jump back to the chart and see where oil is trading at right now, because we've been getting some volatility. Yeah, so currently 64.71. And again, these are 64.25 we're looking at. This is the bullish spread. That has all the value, of course, right now.
Yeah.
And again, you know, if you're exiting this trade, we're about at break even to the positive side now.
Right.
You know, we're putting up about $47. That would cover both legs of this trade. And, of course, when you close out the bullish spread, bearish spread would still remain active for a good hour and 15 minutes. Like I said, 10:43 about right now, and you'd have value if you got that decline. You know, if you want to let it run, you let it run, right? That's where, you know, your expectation, what you're thinking in the market, and it's not stopping right now as it continues. So we'll check back in one more time.
The cool thing is 12 o'clock.
That's right.
In this market, in any market, but 12 o'clock's a long period of time in the oil market.
Yeah. Well, I mean, the move we just got in terms of 50 cents in 14 minutes, right? And it's not stopping. These are 5-minute bars we're looking at here. So quite an acceleration as we continue to rise. We'll check back in one more time before 11 o'clock for the hour.
Yeah, no doubt. So let's go over inside this market and look at the gold contract. So gold contract, we're up 920. Dollar down 270. If we go over GCJ 8 and take a look at this. So you get 206,000 contracts. Now, this is pretty cool, because what's happening here is that you're actually getting volume in it, too. Like yesterday, we come down with 292,000. This is going to, like, do probably 300,000 to 350,000 contracts today.
Big number, especially if you see some volatility come in with the Fed announcement.
Which we're going to.
It could be even way above that if something surprises, or, you know, gold rates move, or, you know, as in more than a,
Right. Now, what I love here, now this is what ends up happening, is that if you're trading this in the Nadex platform, folks, right, you got to understand that that stops at 130.
Yes.
Okay, so be aware of that. Okay,
Definitely.
I mean, I trade this almost every day in that.
Yes.
So on the Fed day, it's, you know, you want to be aware of it.
Yeah.
That's
and again, you could do, you know, the spreads go to the daily. They have binaries in there that go weekly.
Right.
That's one thing that you could
have.
Right.
You know.
Yeah.
So the way this is pretty cool. I mean, you know, this has been teetering You know, in a big way. I mean, it's been driving me crazy, everyone else. No, seriously, you know what I mean? Because guess what? You know, you break down from here, it could be pretty severe.
As it touches, you know, 1308, right?
Yeah, there's not much underneath it. But the way this is trading right now is saying to me that this thing wants to go higher. So let's look at silver, because silver has been the dead dog out here. So silver's up 1.5%, which is dynamite. And you get volume behind the move, too. Look at this. Silver's a psycho, man. Silver is definitely a psycho. And look at the volume in the silver, man. Yesterday, you're down at 69,000. You're up at 54.
Yes.
And what is it, 10:30 in the morning?
10:45, yep.
Oh, it's huge, man. Yeah. This thing's going like 1689. We might get it today. So we're going to have some fun at the 2 o'clock mark.
From 2, right until
and he's
2:30 conference.
2:30.
Press conference.
And that's going to be a big one.
He's going to be taking questions, making statements. That's a big deal.
Right.
First time.
Yeah. And if we go over to the, let's take a look at this currency market, meaning the bond market.
Yes.
Oh, look at, no one's doing anything out here in the 10-year. This is intriguing. So only 485,000 contracts. And this, folks, is anemic. I mean, this thing likes to trade. Look at this, 2.3 million contracts.
Everyone in that bond market is waiting for 2.
They are.
Yeah.
Now, that's intriguing that they're just going to wait for the news and say, okay, I'm not going to speculate on this where it's going to go.
Sure.
So that's pretty cool, man.
Yeah.
You know, the 10-year we're yielding right now 2.9. And 2.950 is the high for the year.
Yeah.
You know.
You say like this year, right?
Yeah.
Yeah.
Last 12 months.
Same no matter what you do, right?
Right.
2.95.
Yeah.
Yeah.
So, big day. Big day. Big numbers out here. Let's take a look at some of the higher volume stocks out here.
Facebook.
Yeah. Oh, look at Facebook went positive. How about that? It was down $2.50 when we started. It's up 46 cents.
So what is this headline? Let's see. Where's he? Wow, so there you go. Zuckerberg's finally going to say something in the next 24 hours, they say, in terms of addressing this, because it is interesting to have kind of no statements from the top executives, whether it's Zuckerberg or Sheryl Sandberg. What would you expect, you know, in terms of the operations of the company? So within the next 24 hours, according to a person familiar with the CEO's plans, and he's facing a rising swell of demands from politicians in the U.S. and Europe to explain how Facebook let the personal data of 50 million people fall into the hands of Cambridge Analytica, a political advertising firm. Yeah. Pretty intense.
So let me go look at this. Yeah, the thing that's amazing to me in that the next 24 hours, okay, well, why aren't you talking right now?
Oh, yeah, and the story might not, I mean, the rise in the stock might not be reflecting that. It's just interesting nonetheless.
Oh, yeah, no, there's no doubt.
I would guess that that's not necessarily the reason there's a bid in there, because that could be good or bad. Who knows what he's going to say, like you say, and
yeah. And
what's he going to say, right? What is there to say, almost, and that's why he's...
What is it say?
Yeah.
Right. Are they going to change their business plan?
Well,
I doubt
it. Like we saw, they had that 2011 decree with the FTC already that said they wouldn't do this, essentially. So what are you going to say? We won't do it again?
Right.
Like they did in 2011?
You know, yesterday I heard, this was pretty cool, it was a Republican and a Democratic senator. They were on, and I heard them on one of the programs on the way home, and they both said that they want to talk to Zuckerberg, and the last time that they went up to Congress, he says, all that happened, he said they had the best lawyers out there and they told us nothing.
Right.
You know,
right. And
of course, we know that's how it shakes out, man.
Yeah.
Do you know what I mean?
Yes.
This time, you know, guess what?
Like we said, what else are they going to, what is there to say? It's in the past, it's happened. You know, all you can say is we'll make it better in the future, and what does that even mean? Exactly. So
nothing.
Exactly.
Let's go take a look at copper for one of our tigers out here. So
right in the middle there.
Right there.
One more up.
Okay, so we're trading 304. Oh, interesting. So it's got to the lower end of the consolidation we're in. And the real question is 304.65. Oh, I see. Yeah, you know, I wouldn't bite on this just yet. I can see, you know, rejected lower price today. The reason I wouldn't bite is this. Yesterday, you had the expansion of volume, 109,000 contracts. You took out the swing point of 304.65, and that's saying that, you know what, it can make its way down to 295 as a test.
Sure.
You know, because when you bring this back, HG1, what you have is that this has been this consolidation for quite some time, man. Yeah, see this?
Yes.
You know, so we're talking, you're going back August of 2017. So it's all right, you know, and the thing that's wild, and, you know, I know Z knows this, if you go to Southern Copper, this doesn't stop. So that's saying to me, after the bottom of the consolidation, we're going higher again in copper, because this is the largest copper stock in the world.
Definitely.
And this won't stop.
Yeah.
Stay right there, folks. Tommy and I are coming right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Think or Swim. Next on TFNN.
Welcome back, folks. We have the Dow Industrials right now down 16, Nasdaq's up 7, S&Ps are down 2. Oil out there 64.69.
Yes, and to check back in one more time, it's about 10:55, so 25 minutes after those news. I have the 12 o'clock spreads we're looking at up there. And as we peaked out there, you know, right now we're looking at, if you would sell it, that's you're getting about $45, so you're looking at almost breaking even, right?
Yep.
But one quick deal, so I pulled up the 230s we had looked at as well. Now, those had a little bit of a bullish bias, right? So that's where you have value starting at $64. So, of course, these, you're looking at $72, $73 of value currently, because that's how far you are above $64.
Yes.
And those were costing us, I believe, $59.
Right.
And these go till $230.
That's intense.
Again, so just laying out all those options. Oil, though, getting a bid. I mean, we haven't seen these prices in a while.
No, we haven't.
Geez, what's going to happen mentally if we start getting into $70 oil again, right?
Seriously,
We'll see what happens. Okay.
Yeah, pretty wild, man.
Definitely.
No doubt about it. And, you know, market bottom line looks like it's going to just hang here waiting for this 2 o'clock time frame.
3 hours from right now. We'll be there soon enough.
Yep. Gold is up 960. That's a nice bid. Silver's up 25 cents. Dollar's down at 294. Let's just go into the dollar quick and take a look at this intraday and see if we get more sellers. DXM 8. Well, not really. You know, it's drifting around, but there's not. Where's that spike? So the first spike down, that's at 920. It's already tested that, which is, you know, we get a high volume spike down, but guess what? Then you test it with 428 contracts versus 8. So this is just building cause. That's what's stopping it over the other side. We had a bid.
Big move, yesterday morning about 6 a.m.
Stay right there, folks. We got swim lessons coming up next. And of course, we got our man, Mr. Basil Chapman. Basil's going to have a workshop 2 weeks from last night.
Yes.
Yeah.
Yep, 2 weeks from last night.
Check it out. Thanks, pal.
Thanks, man.
Go get them, folks. Hang on for the ride.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.